points on the lesson. Live in the hills, but I still get a spread. Started with a little, but I still reinvest it. Fear how I feel, then you feel like a blessing. I just want the lesson, I just want protection. I'm up and I'm down, but they sound like progression. Farmer never plans if he waits for perfection. Finger to the down.
All right, ladies and gentlemen, I got your watch list coming in on March 8th, 2022. And today we are officially in a bear market. Today was crazy. Worst stock market day and close since October 2020. So that was the second hiccup. It wasn't the first one in March, but there was that. The NASDAQ closed in bear market territory. So did the Euro Stoxx 50 and the German DAX. It was bad, and it all had to do with commodities. So we got a lot to talk about. I'm going to go over everything that happened today. There's a lot to cover, but it was very simple, and unfortunately, we are at very key levels tomorrow. We are probably going to gap up or down to some degree, but where we go from here is important. But now we still need our developments, and we still have the CPI on Thursday. So I got the plays for you. I have the keys. We're going to cover all of that. And actually, we made quite a few plays, and even wheat. It is now the biggest wheat rally in over 60 years, but there's a little bit more, and it looks like it will be limit halt up again as far as what the futures are telling us, but we have more plays beyond that. We're going to go over that, and then what to expect for the rest of the week. I have a couple of ideas, so let us not delay. Drop your thumbs up on the video if you find it helpful, and if you don't know, we are live Monday through Friday, 30 minutes before open, youtube.com/the stock market. We will see you there in the morning, but I already gave you the fun facts here. Again, this is a very important day, and now we're going to see if the S&P and the Dow follow bear market territory. But now, this is one big thing I want to jump to right here. Probably for the rest of the week or coming into next week, this will be a big story. You're going to start hearing about banks cutting their price targets, and that has a lot of people worried on Wall Street. Essentially, now that we have the commodity prices continuing for another crazy day, or excuse me, another crazy week, this is just how we're starting. But if it keeps up like this, people are definitely getting worried, and if this adds pressure to the S&P and all of that, we were already 10-15% away from the highs, so that means a lot of analysts and a lot of Wall Street, they have the wrong targets. So we're going to see. We still have Powell again next week and data this week. That is going to be important, but what you saw today, there was not a lot of volatility. We gapped down. By open, we were up, but right when the opening bell hit, all we did was sell off, and you had no sign of relief. It was slow, but you went through every level, and again, the lack of volatility, especially with what we've seen, it is just showing you how serious the commodities are. Again, if you're not familiar, the big worry right now, commodity prices start to go up, and if they stay up, this affects consumer spending, this affects investment spending. It really does affect a lot of people, not to mention the people who have to pay for the cost, businesses, margins. You could go down the list, but factor that in with already the growth scare that we had because of rates. It is not good, but you saw it today. There was only one industry that was up. It was energy, but even some of the material plays, they even gave up. You even saw Alcoa, so there was a lot going on, but now people are definitely worried because yesterday or last week, that was a historic week, but right now here for Monday, you already got wheat going crazy. Oil set another single day move, and then it brings us here to our first pretty picture. I don't know if you guys remember this. We brought this up a couple of weeks ago, and we were saying how important commodities are going to be. I pulled up a chart of nickel at all-time highs. Well, today, people are even talking about a short squeeze now. It had its biggest one-day jump in the history of the London Mercantile Exchange. All of the metals and everything, nothing has moved like this in one day. Again, you could see how big it is. We keep saying you are living through a historic commodity rise, and really every single data point is showing that, and that's why if all of this stays up over the next 3 months, it is going to be ugly. So that was the big thing. Commodities took over, but I'm going to jump to another pretty picture to get a look of it here. This is the NASDAQ, and right now this is bear market territory. A correction is 10 to 15%. The NASDAQ is now down over 20% from its highs. So S&P and Dow, they still got a little bit of room, but now you have 80% of tech stocks. They are trading below their 200-day moving average, and that is not looking good, but it's also a buy signal too, so we'll see. But there was that. As far as the rest of the week, there's a couple of things I'm going to be looking for. Again, it is going to be all all about commodities. Surprisingly, we didn't get too many developments. I have the important ones for you, but we got to wait for that. We have to wait for the data, and that's one thing I'll say right now. This CPI, depending on whether or not we test the lows, that is going to make the CPI that much more interesting because it'll give us an idea of what the data really means. But as of right now, at this 418, this is the danger zone because last time we broke below there, we flushed to 410 and people were looking at the 400 level. So this is why we have to see, okay, do we break this tomorrow? Does it lead into there, or do we already go below that before the CPI comes out? And that will really be a key. So remind me about this question tomorrow. We're definitely going to have to talk about this, but that is definitely something you need to keep in mind for this week. But besides that, I am going to be watching the dollar liquidity in the yield curve. You saw a little bit moves on the yield curve, and that is key. But the big thing we pointed out today that was not good at all is if you look across the board, we're talking 3.5% on the NASDAQ, 2.5, 2.8 on the SPY, and then bonds, they barely moved 0.5%. At one point, they were relatively unchanged. This is meaning either bonds or stocks are lying, and that's what we're going to see. But you didn't get Fed futures and a lot of the dollar signals and that dollar liquidity problem we talked about, they didn't really trigger more than they did on Friday. So this is something I'm going to be watching for the rest of the week. If this goes crazy alongside commodities, it'll point to more volatility or even a bigger problem. But it seems like the commodity moves and then now leading into the data, that's pretty much going to drive us to either a new low or support until we get more data, or then if we flush out, it could start to get crazy. But coming into the company news and events, this is a big one, and I think this one is something we should talk about. There was a lot back and forth with the treaties today. Didn't do much. You're going to get another one there in the morning, and we'll see what happened. You heard a lot about the United States and banning oil, and that was important. But here after hours, the Russian oil minister, he said that they are considering banning Europe from Nord Stream 1 in retaliation to Germany and all them stopping the development of Nord Stream 2. So this is very, very bad because now you're hearing today the debate. Well, the White House said they want to do the ban, but then all the other countries said they can't do it. But now Russia's threatening to cut off the countries that said they won't do it. So pretty wild to think about. We also got more updates here even after hours. The White House has made no decision on the Russia oil ban, but that bipartisan bill, it is moving forward and they already have a framework. So essentially, we're just waiting for the word. And some people said it might even be done in an executive order if they were going to do it, because it would give Biden a lot more flexibility. So we'll see how that plays out. There was also another report, again, related to the oil and everything else. The White House is also weighing buying oil from Venezuela to ease something. So a lot of oil, a lot of commodity. Keep your eye out for it and just watch the futures every single morning as we get into it. But there was that. Then this one was crazy. Peabody, and this is showing you the darker side of the commodity thing, and this is why the assets that you're buying will be key. But Peabody, they're a coal company, and coal has been surging, but they are dropping 20% after hours right now. They got a $534 million margin call, and that is because they had a hedge, and they essentially agreed to deliver coal at $84 last year. Right now, it's trading above $400. So essentially, they got to deliver on the coal. The price is getting crazy. If they still want to hold that hedge position, they needed to put up money. JP Morgan gave them a revolving credit line at like 10% interest of $534 million. So pretty wild. We'll see what happens, but kind of the dark side there. Again, even if they're in the space, it does not mean they are safe, but watch out for that. Then this one was very interesting. The API, and if you didn't know, they are actually the biggest U.S. oil lobby group, but they say that the Biden administration is misusing the facts on oil permits. So I'm sure if you heard Psaki or any of the same speeches there from Biden, what he's discussed is how a lot of these companies aren't using the oil permits. But now CEO of API, you've probably heard of the API data report. Well, he came out, and here is the direct quote. I didn't want to butcher it. He said, quote, "Just because you have a lease, it doesn't mean there's actually oil and gas in that lease, and there has to be a lot of development that occurs between the leasing and then ultimately permitting for the acreage to be productive." He said, "I think they are purposefully misusing the facts here to advantage their position." So pretty big. We'll see how it plays out. But right now, the price of oil is getting out of control. This is what people are going to be watching watching for, and I'm sure we're going to get a lot of back and forth, and I wouldn't be surprised we may have some puck moved in some direction, whether it's banning Russia or we'll see what they do to ease this probably by the end of the week. So we'll see what happens, but it's all about the commodities, and I hope you're ready. But that is pretty much it. So let us get into the plays. So right off the bat, I got 3 stocks that I'm looking at coming into today or tomorrow. We did make a lot of plays today, but before I get any of them, I want to go over wheat. So here are both of the plays that we had. A lot of people are asking, okay, when to buy, when to sell, all of this. Again, we have a very good position. It went up a lot today. It's now about 1,100, almost 1,200%. And this is good, but why haven't I sold? Why haven't I wrote it up? I'll just give you something very simple to understand with all of this. I am essentially just waiting for the day that we don't have a limit up halt. Literally, ever since we've gotten into it, I think there was like one day where it didn't limit up halt, but here are the futures. Again, the bid's already at 1,400 there. It's going to be another limit up halt, but what I'm saying is wait till there's a day where we could have the ETF open with the options, and essentially it's going to stop going limit up, then it's going to trade in a range, and then we will have a better idea of how the market's pricing. Otherwise, I'm still riding it out, and to me, it looks like the option chain is just as uncertain, and they're waiting for that moment because literally even the puts from a couple of days ago, stock goes up another 20-30%. We are still up on the puts. So that's what I'm looking for any re-entry, any take profits or anything, and we keep talking about it, and this is the problem created with everything going on. There's a difference between the net asset value and the price of the stock. You're going to have it lag. If the futures are halted limit up every day, the NAV is going to be one day behind. So that's what's creating a lot of these moves. But I've been seeing a lot of people freak out today. They got halted. They have to make sure the shares are issued and all of that. There was a lot of stuff. It goes down. People freak out. But you have to understand here to a certain degree, if you don't have the future price of the options or the futures itself, you don't really know what it's representing. And then even if it is halted limit up, the value of this is pretty stable. You know what it's going to be worth. So keep that in mind with all your plays. Like I said, I'm just waiting for the limit ups and downs to stop, and then we will get an idea of now, okay, this is where the market, farmers, everybody involved, this is where they start to price it. So be patient with it. Again, we got one of the best positions in the house if you got time, so you will be good to go. But that's a little rundown as far as the first play. I went with ARK puts, so I'm going to go over this one, and I actually like it just given the fact that we are at these crucial levels. We've been getting a lot of volatility, but then if you go to the ARK chain, you'll notice this contract was pretty much cheaper than any of the other ones, so that really stuck out to me. I did go super far out the money, but now why did I buy this play? You've probably heard me talk about this quote-unquote scanner. It showed up again. This is where we made a lot of plays last week. We had that GLD, the PLL, and then even the snap puts, and they were looking good. Essentially, I'm looking for big trades that are going through, but then it's easy to find on any option scanner. You could go look up any unusual option activity, big option orders, but then I'm trying to go through the chains and find them on options that are relatively dead. So it just really sticks out. A lot of these plays, you're watching these option chains, there's no activity, and then there's some of these like anywhere from a couple million to above $10-12 million trades. So I'm like, it's giving me some ideas. We did a couple of them. Even the next play, we did it today. It hit. So I do think they are a little risky, but the one thing that I am trying to tie it into is just an underlying logic. Any of the ones that I've went through that have shown up on this scanner, I'm just making sure they relate to something going on. There was Snapchat. It was near IPO levels, but that was the only one that's kind of borderline. Other than that, every other one that showed up on the scanner, it was a commodity play. So we really did get some good positions. But now with this being ARK, I think the only exposure would be Tesla or breaking some of these key levels and this thing selling off. So we'll see how it plays out. Again, it's going to be a very, very interesting one. But as far as the play, I grabbed the April 1st $30 puts. These were the last one. I grabbed 100 of them at about 6 cents. And I think the guy before got a little bit more. And honestly, you don't even see it show up, but pretty much you could see this whole chain. And this is what I'm talking about. Open interest isn't too high. There's only about one or two trades with over 1,000 in open interest. You see the volume wasn't hot. And then before we got into this trade, I saw one order go through for about 5,000 contracts. I said, well, I think this one's going to be interesting. I think it was actually right here. So this one was just even the day before, but then this is when the big order came in there with 4,000. So I saw that. It stuck out. I said, all right, let's go for it again. This has an open interest of 1, but that was the first play. We'll see what happens. It's going to be risky, but if we get into volatility, I mean, this one might be good. And like I'm saying, compare it relatively even a week or two before or after the same play. Again, very far out the money. They are going for a lot more. So a lot of activity on the April 18th or 14th as well. A little bit more time. So we will see what happens. But that is the first play. Coming into the second play now, PFGC, PPC, and even Kellogg's, any of the food stocks, anything related to food prices going up, these may very well be the next one. Again, a lot of people would think higher food prices would benefit them, but not if you need that as an input cost. So we saw PFGC and PPC. They dropped today. I think Kellogg's did a little bit better, but I'm going to add this now to the list of stocks being affected because it really did stick out. And now even coming into PFGC, this is the play that I made today, and I grabbed 2 of these $40 contracts. We bought them at about 50 cents each. I sold one out at about like 90 cents, made it free, and then I'm holding the other one, and it had a really good gain today, but this one also showed up on the scanner. It was actually this option that showed up, but he paid a lot of money for it. I wasn't really too down with it, so I said, all right, let me get the one below it. I was able to snake the chain, had a very wide spread. It filled me at 50, so I said, all right, it's good, but you could see here, look at this whole option chain. April, literally 100 open interest, 20 open interest, and all of a sudden this guy's trade came in. So I went for the ones below it, and this ended up just being an absolutely killer trade over there. So we got that, flipped out of one. I'm still holding that, but again, watch Pilgrim's Pride. They dropped as well too. There wasn't any news, but a lot of these food companies just got absolutely demolished today. So watch out for that. That was the second one. And then finally, Boeing. I went for the rollover today, so we'll go over it, but I still like the idea. Like we said, if Boeing breaks below 170, it's a danger zone. I was getting a little bit worried. We had a contract up around 400%, so I said, okay, let me get one. Let me sell out of it. It's short term, and then I could get one for a lot cheaper for April. If there is any sort of bounce here in the meantime, then we could go back for the cheaper one. So essentially, I'm still in the game, and I'm waiting for the double dip, but now we made sure we got to take care of both things. Again, I didn't want to get clapped on the short term. I sold out of the 160 for like 237, so I got a little bit clapped here. It's kind of like right around here. Ended up going to $4. Again, that was the one we bought at 60 cents, so almost another 1,000%er. And then I said, well, let me take some of the profits there, and then I rolled over to a 115 put for 50 cents. They went up again almost 50% as well, so I was like, all right, and that way spent $50, got to book the profit. And like I'm saying now, if it does end up slowing down and comes back up, we could get another play, but even then I think these will do a couple $100 in damage if it does flush through. So really like Boeing, like how they're moving, definitely going to be watching out for that. But those are the main plays. As far as everything else, we made a couple of other ones. I did take profits on these Alcoas. Again, you got to be careful because now any of these plays are 2 weeks, and we sold the 110s, and I got rid of the last set of 10 of them at like 80 something cents. They dropped down, so we bought this at 10 cents. Even 30 cents is still a gain, but we got to maximize it. I am now all out of that play. And then I did the same thing with the Snapchats. Again, this is one of those plays that showed up on the scanner. I think it was the April 8 25s. We bought these at like a quarter. They were up again to like another like 400 or 500% there, or excuse me, 150%, or that's what you would have got. I sold out very, very early. I think I sold out like 80 or something like that, but not too bad. Closed out of that trade. Then I made a play on Snap On, not Snap, but this one was kind of a little tinfoily. I went a little bit bigger with it. I grabbed 5 of these 175 puts for April for $200, and the logic was their website has been down since Friday, and even throughout today it was still down. And if you even went to the website and tried to Google it, you would see like a VMware thing that they got hacked on. I even took a screenshot of it. Again, if you searched them on Google, it said that they had VMware on like mission critical environments. All of their like subsidiary websites were down, and then they eventually got it fixed throughout the day, and then they removed all of the posts on any of their social medias, but nobody really talked about it. But I said, well, website and a lot of outages being down for over the weekend into Monday. I said, well, let's see what happens. I grabbed the play on it, but we'll see how it plays out throughout. Again, Snap-on really doesn't move, and this one was expensive, but there was that place. And then finally, I grabbed ALGM, and I bought the $20 puts for April. Again, this is another one that showed up on the scanner. I bought 5 of them for 30 cents. They went up almost 100%, but as you can see here, dead option chain, Allegro, they're related to the chips, and again, people have been talking with everything going on, and they were an IPO, so if you even look at their chart, they're kind of even hitting that breaking point where they may very well just get clapped more or less, but option chain was dead. This one came up on the scanner. I said, let me see if I could get a cheaper one, $150, thought it'd be a good one, and then, yeah, those were the main plays, but as far as everything else, watch wheat. It's going to be exciting tomorrow. Again, it's moving right there. Just keep your eyes out for it. Hopefully, you got the signal that we're waiting for. Going to be watching ACH. They went up and the options are up, and this was supposed to be the material play related to China. They've been holding up a little bit good. They were up 4% pre-market, then sold off, so going to be watching them, especially if things keep going crazy, so watch them. Going to be watching PFGC. B&O were in the money, and now you could even ghetto spread all of these like to a crazy degree. So we talked about this, still holding. Again, we have till October, but we bought these for $1, and you are now in the money, and essentially you could go anywhere on this chain, get more than 100% of what you paid, and still have like $1,500 per contract. So watch out for those. We are still watching the story there. Again, ARK is going to be interesting along with BA, then Alcoa. I'm going to wait for a double dip, and we'll see. Again, I have the ACH, but I still do like a lot of the aluminum plays, especially after nickel, so watch out for that. Watch UU. We still have this one, but a lot of people are bringing up uranium, and again, anything energy related has really been going nuts, so watch out for them. NTR, this thing's going crazy. I thought the plays were really expensive, so I'm just really waiting for a pullback, but that's one of the fertilizer ones going nuts. CVX, they've been going, XOM was all over the place, but I always forget to look at CVX, so just keep them in mind with everything. XLF, banks got clobbered today. Again, it's weird because dollar liquidity didn't really change too much, and that's what we want to watch for, but this was very bad. Our old August XLFs, those actually came back, which was kind of surprising, so watch out for that. Going to be keeping my eye on those. And then Facebook, they hit a low. Even those old Facebook leap puts are up 50%, and this is now a big level again in the mix of everything with commodities, all that. I think what slipped by a lot of people, a lot of growth stocks absolutely got crushed. That's kind of why the ARK play kind of makes sense a little bit, but this one is bad. Watch here. It's pretty much getting to the middle of some of these 2018 levels, so we're going to see where it goes from here, but keep your eye out for that. And then RTX, they lagged a little bit, ended up selling off. The premiums are still up, but I'm hoping that they catch up with LMT doing its thing, so watch out for that. Wheat keeps hitting the high ticker after hours, man. Okay, but there's that. And then finally, TLT and the dollar. It was very weird. This thing did not move at all considering how much we moved, and that's what we got to see. One of them is lying, so that means either bonds are going to really have to move and catch up, and that'll happen if the market keeps moving down, or market may chill out, and then we see the bonds kind of calm down a little bit. But overall, I would wait until the CPI, and probably CPI leading into PAL next week. That'll probably be the window to snitch, and then we'll see where commodities are at, and we'll see how the targets are looking. So I hope you're ready, but that is your watch list, ladies and gentlemen. Make sure hydrate healthy, ready to go. Make sure post your watch list. Make sure we see you there in the morning. I need the armor on. I need the helmet shining. I need you to remember, baby, opportunity is everywhere, but the goal loves you. I love you. We'll see you in the morning. Let's go.